The Levelling Up Secretary told me in the last hour that this was going to be a game changer. The government says this fiscal event, as they're calling it, will ignite growth. So what do you make of it?
Well, I think growth is the right question because growth has been extremely anemic under the Conservative Party for the last 12 years. It's been a lot lower than was the Labour rate of growth, and what they're trying to do is to get back to something like the rates of growth that the country enjoyed during the Labour years. But the way that they're doing this is to run a huge risk with the public finances by putting all of this on borrowing. And Simon Clarke, who was on your programme, was issuing dossiers just a few months ago about the Labour Party's opposition to the national insurance rise, saying this was the most irresponsible thing since Kingdom Come, and it was going to result in a huge black hole and the rivers would run red and it would all be terrible. Here we are a few months later with them agreeing with us on that, but going a lot further and taking a big risk with public borrowing at a time when the Bank of England is already raising interest rates and mortgage rates.
Well, you say it's a risk with borrowing, but the government says these plans will stimulate growth, and so there won't be a problem.
It's a good question to say not only what are you borrowing, but what are you going to do with it? What are you going to buy with it? And actually, at the heart of this, there isn't a plan to create the kind of economic growth that we need, for example, through a real drive for the greener transition in energy that we need to see, an investment in the skills and productivity capacity of our workforce, reforms to business rates, which are raised with us urgently by businesses of all kinds, and the institutional stability that we need to see rather than a tug of war with the Bank of England, the silencing of the OBR and so on. So what they're doing is borrowing for a return to trickle down. The idea that if only we unleash the animal spirits and make those who are already wealthy even wealthier, then the benefits will trickle down to the rest of us. That's an idea which was tried before in the 1980s. It didn't work, so we do need growth, but we need growth that everybody can take part in, that everybody can feel the benefit of. And from what's been trailed about today, that doesn't look like the outcome of the plans that the Chancellor will announce.
Well, yes, and Liz Truss has addressed this issue, hasn't she? She says she's comfortable with the fact that the rich may benefit a bit more from some of the tax cuts, for example, scrapping the rise in national insurance. She says they pay more tax to begin with, and ultimately not introducing that tax rise will mean they'll spend more. Also, companies will expand with lower taxes as well, and ultimately everyone will benefit.
Well, if you take corporation tax, for example, they want to keep corporation tax where it is right now. It's been the lowest in the G7 for many years, but we've also got the lowest investment in the G7 in terms of business, so it hasn't produced the benefits that we've seen. They're trying to sell today as some brave new world, but actually, after 12 years of failure to deliver economic growth, I think the country is tiring of the idea that what we need is to change the Conservative Prime Minister every 2 years, that person will tell us all the policies pursued up until now have been wrong and a mistake, and that suddenly they're the change that the country needs. It's an idea that's wearing thin, and today feels more like the last throw of the dice than a brave new world on economic growth.
So you say you're worried about the levels of borrowing, but are you comfortable with the tax cuts?
Well, if we take national insurance, for example, we always said that was a bad idea to impose a national insurance rise on working people in the middle of a cost of living crisis. As I say, we were furiously attacked about that. So we agree with that part. But on the rest of this, we think that it does run a risk to borrow for broader tax cuts across the board. Every country borrows money. But if you're going to borrow money, there is an important distinction between borrowing for tax cuts or borrowing for sustainable investment that might actually improve your rate of growth in the long term on things like infrastructure and skills and cleaner energy. Those are investments that we could get a good return from, and we think that's where the investment effort should go.
Right, so what is Labour's plan for growth then?
Well, the energy's got to be at the heart of it. We've seen our vulnerability over over the last year. So we would, for example, double onshore wind by 2030. We would triple the amount of energy we get from solar power. We would bring forward new nuclear. We'd also change business rates to help stimulate businesses. We would guarantee the institutional stability that the Conservatives have been so reckless with. And we'd also make sure that we're investing in the skills and productive capacity of the workforce. And that seems to be entirely missing from the plan that's going to be announced today.
We heard from the Levelling Up Secretary saying that Europe is in a pattern of stagnation and we can't afford to be part of that. Something radical needs to happen, doesn't it? The government say that's exactly what they're planning.
His government has presided over stagnation. We've had a far lower rate of growth.
They say they've got a new plan that's a break with the past.
They always say they've got a new plan. This is the 7th economic growth plan in the last 10 years. It's the 7th plan to do what they say they're going to do from the same government. It's not a new government. They've been in power for 12 years. The minister you just interviewed served in the last cabinet. The Prime Minister is, I think, the longest-serving cabinet minister of all of them. And the Chancellor is also a long-serving cabinet minister too. I'm afraid it's wearing thin to say that the 7th plan is going to be better than the other 6. There is a pattern of stagnation. There's no point in blaming Europe for it. We've had a pattern of stagnation on economic growth in this country, which has been presided over by the Conservatives. And that's why they are not the change that the country needs.
You talked about the silencing of the OBR. The OBR often when there's a budget will produce an analysis, won't they, of what it means for the economy and how much it's going to cost. When I spoke to Simon Clarke, he said it wasn't about silencing them. He said there wasn't enough time to pull together a report. What do you make of that?
Honestly, I think that's nonsense. What are they frightened of? The OBR are under a statutory duty to produce a report twice a year. Today's event isn't termed a budget, but to be honest, the measures in it are as big as any budget, maybe bigger. So it is perfectly right that the OBR should have produced a report. One has to assume that the government are frightened of something that might have been in that. But there's a more important point about this point about institutional stability. It's not just about the OBR. It's about flip-flops on policy. This is the third change in national insurance in 6 months that's been announced yesterday. We've got a tug of war with the Bank of England, where they've had to issue a warning to the government yesterday that having raised interest rates by 0.5%, they will return and do more in November, depending on what's announced today. And then you've got the firing of the Permanent Secretary at the Treasury. If you take all these things together, they do not send out a message of confidence and stability to investors. And when you're borrowing as much as this government is to fund tax cuts, you need that confidence from investors. They've been reckless with this. They used to style themselves as the party of sound money. I don't think after today they're going to be able to do that.